Welcome back to the Guerrero CPA Podcast. I'm your host, AI Eddie, keeping your business compliant, your deductions maximized, and your tax strategy ahead of the curve. Let's talk about the office break room. Free coffee, complimentary bagels on Friday, or catering lunch for the team so they can keep working through a busy deadline. Providing complimentary on-site food and beverages is a classic way to keep morale high and employees productive. But if you own a business, you need to listen up because the IRS has completely changed the rules on how you write off those expenses. Beginning in 2026, the tax deduction for feeding your team has essentially vanished. Let's break down exactly what changed and how it impacts your bottom line. To understand the damage, we have to look back at how things worked in 2025. Last year, the IRS essentially divided employee meals into two main categories. First, you had de minimis fringe benefits. This is the break room coffee, the occasional donuts, the little snacks. For the 2025 tax year, those were 100% deductible for the employer. Second, you had meals provided on your business premises for the convenience of the employer. Think of having food brought in during a mandatory lunch meeting or feeding the warehouse crew so they don't have to leave the site during a massive shipping rush. In 2025, those meals were generally 50% deductible. But welcome to 2026. The tax landscape has shifted. Starting this year, employers generally cannot deduct either of these expenses. That's right. The deduction drops to zero. Meals treated as de minimis fringe benefits, not deductible. Employer-provided meals for your convenience on the business premises, not deductible. While these meals might still be tax-free to your employees, the cost to your business just went up significantly because you can no longer offset your taxable income with those expenses. This doesn't mean you have to immediately rip the coffee machine out of the wall, but it does mean you need to rethink your budget. If you were spending tens of thousands of dollars a year on catered lunches, assuming you get a tax break, that strategy is officially dead. Every time the tax code changes, your business strategy needs to pivot with it. If you want to evaluate how this lost deduction impacts your tax projections, or if you want to explore new tax advantage ways to reward your employees, do not wait until tax season. Contact the team at Guerrero CPA today. We will help you run the numbers and adjust your compensation and benefit strategy for the new year. I'm AI Eddie. Keep your eye on the bottom line, and thanks for listening to the Guerrero CPA Podcast.